Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Thursday, February 17th, 5 minutes after market close here in Jacksonville, Florida, 4:05 p.m. Eastern time to be exact. And yes, we had a nasty day in the market. We're going to get to that, but I want to give a little precursor to something we're going to look at in just a moment here, and that is some moving average crossovers on the weekly time frame that we have not seen happen for QQQ and SPY since the COVID crash. So we're going to look at the weekly charts on QQQ and SPY. I think it's extremely important to take note of this. And we're also going to compare it a little bit back to 2018. So we're going to get to that in just a moment. But first, let's get through what happened today. So selling accelerates to push indices back below key levels. Like I said, it was not a good day. G6 down almost 3.5%, S&P down a little over 2%. Q's down a little less than 3%. The Dow's down the least of the major indices, down 1.8% roughly. Mid caps also down a little over 2% like the S&P, and the Russell 2000 down about 2.5%. And we really saw the selling accelerate more or less in the second half of the day, kind of a waterfall type of ordeal where it just kept dripping lower, and really we didn't see buyers stepping in today. That was kind of the feel of the action today. So poor performance across all major indices, growth stocks, of all the major sectors for the most part were red, with the exception of the extremely defensive ones. We're going to look at that in a second too. So just in general, a pretty negative day for the markets. Market state remains in consolidation. We haven't broken through those recent lows yet. For one, going back to February 14th, and then obviously the January lows from a couple weeks back. So still in consolidation. 131 follow through day did fail. That's where we're at. And we also have no change to market state right now. However, we did get a sharp move back below the 200 today on the S&P. Any follow through in that direction, we'll probably see this long term here be going to bearish relatively soon if that continues. Additionally, we've seen market leaders trying to hang in there, trying to cling to their 21 EMAs, that type of thing. But the market is certainly not being a friend to any stock right now. So again, these are leaning towards bearish, at least at this point. Market leaders today very close, some hanging in there. A lot of the 21 over 21 list trying to cling to the 21, but we'll see where they close out the end of the week. So before we get to the charts, as I always do, let me highlight Revere for just a moment. As you can see, this is me in the middle. If you have any questions, please send me an email, hunter@revereasset.com. If you're interested in what we do, what our strategy is, what our approach is, you can email me, or you can email Dan, Tim, Merrill, or Don at revereasset.com as well. So let's get into the charts. And what I'm going to do is I'm going to do my normal daily analysis here on QQQ and the remaining indices, and then we're going to come back and look at those weekly moving averages. So as you can see here, we got a nasty open this morning. The futures were down overnight, came into this morning with the Qs down about 0.5% to 1%, S&P down about 0.5% or so. And like I said, that accelerated as the day went on. So you can see here, high of the day on the Qs, 353.46, corresponds also to this declining 8, which is something we're really going to want to pay attention to moving forward. Just in general, this declining 8 can often be kind of a guide for downtrends or selling. So as you can see, it was here. So for all intents and purposes, though, we have not broken this low, which is good. That's kind of the next level I'm watching here on QQQ is, do we take out this 343.89 low from earlier this week? So QQQ not looking great. You wanted to see this 350 level hold. I've been talking about how important that is. And today it really tried. We had an initial spike down to this 350 area. We went sideways there, tried to get back above it. But just as the day went on, we were not able to hold that 350 area on QQQ. Let's move to SPY. 440 is going to be essentially the same level in a way as far as the comparison goes for QQQ and 350. So same kind of thing. S&P was fighting to hold on to this 4,400 level. SPY fighting to hold on to this 440-ish level. And as the day went on, after kind of around lunchtime, we just kind of fell through it and then just kept accelerating, kept falling to the downside. So 440, you wanted to see that hold, and it did not. Now, same situation. We're watching this low from 214, 435.34 on SPY here. So that's the next line in the sand. You want to not see that broken. If you're operating from a bull thesis here, you'd like to see this get back up into these moving averages and not continue down lower. Also, I mentioned earlier, back below the 200, as you can see here with the gap down, also kind of looks like a rejection at the 8 now that this candle is in place. Quickly, we'll move through the Dow, the Russell, and mid caps. They're all going to look almost identical. You can see the Dow actually did break below that 214 low, but this is also one that's been in a little bit of a tighter range, I guess I would say, than it hasn't traded as volatile, obviously, as the Qs have. So you got DIA poking its head below the 214 low. We're going to look at IWM, who actually looked the best and still does look the best on this basis here, this very short-term basis since the bounce. IWM has been holding up well, partially due to strength in oils. But today, even though we got 2 closes back above the 21, 2 closes back above the 8, right back below the 21, right back below the 8, and we're right back to this important 200 level on IWM. And then mid caps, very similar pattern-wise to IWM. Right back, they got above the 21, got above the 8, 2 consecutive closes, and then right back below it today. So MDY, IWM, very similar since the bounce, right? Since this date in here, since the end of January, roughly. The rest of the indices all look pretty similar outside of those two, the Dow, S&P, and Qs. So let's go to the weekly chart of the QQQ, and let's talk about these moving average crossovers that have not happened since the COVID crash. So what I've done is I've put the QQQ on a weekly here, as you can see, and this is going to be your 10, 20, 30, and 40 week moving average. So orange line is the 10, green line is the 20, pink line is the 30, black line is the 40. So as you can see, this is the COVID crash here, and we come up out of that COVID crash, and from this point here, call it May of 2020, we never see the 10-day moving average, or the 10-week moving average, excuse me, hook back down through the 20-week moving average. It gets really close in here, it gets really close here, but now we're seeing that 10-week moving average get below the 20 and the 30-week on QQQ for the first time since the COVID crash, first time since right here. And we're also likely to see the 10-week moving average cross through the 40-week moving average to the downside, again, for the first time since the COVID crash. But what I want you to look at here is this crash here from COVID, obviously we all know was very volatile, very straight down like. This pullback and sell-off here that we've experienced has been a little bit slower, and I think it looks a lot more similar to 2018. As you can see here, we have a nasty move down, but we try and rally back up into the moving averages. And then right around here is when those moving averages, the 10-week starts to cross through and down below all of those, giving way to further downside. So we're kind of right at that point. I'm not predicting the future. I'm just notating a similarity here. We're seeing those moving averages cross over on a weekly time frame for the first time since the COVID crash. That's all I want to point out to you, is that the 10-week has not been below the 20, the 30, or the 40-week on QQQ since the COVID crash, but that is beginning to take place now. And quickly on the S&P, it's very simple. This is the first time the 10-week has been below the 20-week on SPY here since the COVID crash, okay? So same situation that we were talking about with the Qs. First time since right here on a weekly time frame, this is 2020, that we've seen this orange line cross below this green line. You can see once we got back above, right around May 2020, we never saw the orange line go back below the green line, but here we are, and that's what's happening today as we speak. So like I said, it's a little bit more similar to what we saw in 2018 than really what you see here with COVID. Initial gap down, try to rally back up, we're failing to these moving averages, and now as that 10-week crosses through, we give way to further downside. So once again, not predicting, just notating a similarity and pointing out the fact that this is the first time the 10-week is crossing through some of these other weekly moving averages in quite some time here on the indices. So quickly, we're going to go through some of the better performing stocks and sectors here and get back to a daily time frame. XLP did not look good earlier in the morning along with the rest of the market, but ended up showing really nice relative strength as the day went on, the strongest sector of the day. I think this speaks to some of the fear that's out there. XLP really showing relative strength on an intraday basis. We also saw XLP finish green, two of the only sectors to finish green on the day. We saw defense stocks strong. Northrop Grumman, we've talked about this one. Lockheed Martin, we've also talked about this one for obvious reasons. With international tensions, these are getting some attention here. LMT, NOP, Raytheon, those are some of the big names in that space. We also saw XOP try to stay green. It actually did. So XOP also in that group as one of the only green sectors of the day, but not a good candle. But nonetheless, oil showing some relative strength versus the market today, even though it opened up relatively strong today. Gold continues to show strength. Another piece of evidence in regards to the fear when you have utilities, staples, gold, and treasuries going up in price, that means that there's typically fear elsewhere. So gold doing well. NEM, a name that we owned until today. We took profits on this name as it got a bit extended here. We sold NEM today for a nice gain, up pretty big today. Another name we took profits on was Nucor after it had moved up higher. So we took some profits on Nucor and NEM today on the basis of the backdrop of the market continuing to be unhealthy, accelerated selling, and the fact that these stocks were near the top of their ranges. A couple more names that held up well today: the chemical agriculture space, Nutrien, CF, those types of names. You can see they were up nicely today. Also, stocks, a recent gap up, not an incredibly great looking chart, but big time relative strength in growth land today. I know it was only flat, but pretty impressive for a growth stock here against the market backdrop today. It has acted relatively well since earnings. So worth noting, one of those stocks that's growth stocks that's trying to fight against the trend. Now, some of the stocks that were bad today, and there was quite a few, more than I could begin to cover, but we're going to cover the most important ones. So Tesla, Don talked about this on Tuesday as being key to the market. Can it get back above this declining 21? The answer is no, it did not. A pretty harsh rejection here. You can see there's not a ton of volume, but that's again evidence that there was selling, but not buyers stepping in. So Tesla back below that declining 8-day. Also, NVIDIA with a really poor reaction to earnings came into the day around 260, 257, right around market open, and pretty much just moved downwards all day. Did end up finding some support here at this 242-ish area, but nonetheless, back below the key moving averages, back below that 250 level on NVIDIA. So not good for the general direction and leadership in growth stocks. We want to see NVIDIA, Tesla act well. That's not what we got today. AMD, same boat as NVIDIA. Don't like the way this one acted. It's right there on the precipice of breaking these recent lows and getting below the 200. Not really a whole lot of strength in the bounce here as you would have liked to have seen. Just a few more here. There's plenty of bad. Like I said, ARKK down nearly 7% today after attempting to get back above the 21. A pretty nasty follow through to the downside here and a failure to do just that, failure to get back above the 21. Upstart, a recent gap up that really was showing big time relative strength today, ended up finishing very poorly. Just evidence that the market is not rewarding gap ups really all that much right now, and they are currently a source of liquidity until proven otherwise. Just a few more here as I keep running through these. Bill had been acting like a leader, ended up being down 10% today. Affirm, which is one that we've been tracking, had been trying to show some strength here, had a fiasco with a tweet that came out with their earnings numbers, and that would be here on this day where they tagged 83 and also tagged 50. And you can see from this day here, they have gone from 83.57 on February 10th to now $37 here on February 17th. So quite the last week or so for Affirm after a PR nightmare. From a sector standpoint, we had consumer discretionary, one of the worst todays, technology, and additionally financials. As we saw rates move down a little bit, financials really having a tough day, banks having a tough day. So there's some of the worst sectors for you. And we also saw crypto begin to break down a little bit after being one of the early leaders of the bounce phase, showing really nice RS versus the market, hanging in there really well when the market was pulling back, but that it seems to have lost seems to have lost that correlation or that strength. It's now below the 21. Bitcoin's approaching 40,000, so that's not really a good sign. This was one of the early leaders on this bounce, and getting rejected pretty quickly here at this declining 50 is what it looks like. So that is going to wrap up the video for today. I hope you guys enjoyed it, found it valuable, found it insightful. Feel free to send me any questions. I will see you guys on the podcast this weekend. Have a great weekend, everybody.